Welcome to Non-Consensus Investing. I'm Ram Ahluwalia, your host and CIO at Lumida Wealth, where we specialize in the craft of alternative investments. At Lumida, we help guide clients through the intricacies of managing substantial wealth so they don't have to shoulder the burden alone. Through this podcast, we draw back the curtain to reveal the strategies employed by the best in the business for their high net worth clients so that you too can invest beyond the ordinary. Welcome to our next edition of Lumida Non-Consensus Investing. I'm pleased to be joined by Paul Mann, the chairman and CEO of ASP Isotopes. You know, there are quite a few different trends and forces in the world. You've got the rise of semiconductors, the renaissance for nuclear energy, you've got geopolitics, you've got lasers as well. And all these forces come in one unique story, which is this rapidly growing microcap called ASP Isotopes. Paul has had a career in the biotech category. He was at Highbridge as well before, and Soros. So Paul, thank you for joining us.
Thank you for inviting me to speak with you. So, yes, as you said, it's an interesting time for the industry.
Right. And I should also know that there may be forward-looking comments here. Check out the website for disclaimers. You can check out ASP Isotopes for that. Any other disclaimers you want to convey, Paul?
Yeah, no, we're Nasdaq listed companies, so just review our disclaimers, which are published in our 10K and 10Qs and whatever filings we have with the SEC. So yeah, thank you.
Terrific. Well, let's start with the big secular trends. We've got semiconductors and uranium. So on the semiconductor side, you look at the share price of NVIDIA or the ETF for semiconductors are all on a tear, and the world needs GPU compute yesterday. So help me understand, what is Silicon 28? And I know that you play a special role in developing this isotope, and we'll unpack what isotopes are, later. But what application might Silicon 28 have for the semiconductor industry, and why are firms reaching out to you to learn more about it?
Yeah, so silicon has three isotopes. One with a mass of 28, another with a mass of 29, and another with a mass of 30. And when you look at a semiconductor, you can't obviously see the isotope, but you see a silicon that laid down the conductivity for the semiconductor. But the 29 isotope doesn't conduct. It actually is a negative conductor. So if you think about 28 facing this way, and 29 facing that way, the current spur this way, 29 blocks the current flowing. So we can remove that 29 isotope and enrich it really highly enriched in the 28 isotopes, talking about 99.995% enriched in the 28 isotope. Your conductivity goes up thousands of fold, and your heat transfer capability increases multiple folds as well. And there's a lot of good data emerging kind of showing that. So, we recognized very early that in order to enable quantum computing, one is going to require highly enriched silicon 28. So we initially started thinking silicon 28 would be useful for quantum computing. But obviously, as you mentioned earlier, there's huge demand for high processing capabilities in these data centers and these new microchips and semiconductors. And there's a belief that if people use silicon 28, highly enriched silicon 28, then the performance of the semiconductor will increase thousands of fold. And that will obviously bring down the size of the semiconductor, the amount of heat you generate, the amount of power it draws, all those associated benefits with it. So we've got a lot of interest from a number of semiconductor companies, a number of industrial gas companies who are desperate to get this highly enriched silicon 28. And that desperation wasn't there 12 months ago. 12 months ago, we were talking to most of the semiconductor companies about enriched silicon 28, and there was an interest in it. But I think that interest suddenly became more of an urgent need for it as we got into first quarter of this year. So yes.
So Silicon 29, is that the primary silicon isotope used in semiconductors today?
No, so right now, a semiconductor is normal silicon, so it's going to be 92% of the 28 isotope, about 3% of the 29, and 4% of the 30. If we can strip out that 3%, then it's much faster.
Oh, I see. So it's really purifying the silicon that's used in the semiconductor application. to improve the conductivity as well as the energy efficiency, the heat transfer. That's the basic idea. And improving that purity drives this efficiency.
That's what the belief is. Yes, correct. Yeah, yeah.
Got it. Got it. And so you have a large semiconductor firm. I know you can't name them, and they've paid you they've signed a commercial agreement with you to help produce silicon 28, and they're going to go test whether or not this thesis is true, that you can generate, higher efficacy. That's the basic idea.
Yeah, that's the basic idea. Yeah, correct. I mean, there's been a lot of research done in this area. So you can find a lot of research papers on the web about highly enriched silicon 28, quantum computing, processing qubits, faster semiconductors. But it's not that easy to enrich. I mean, we're probably the only company in the world that can actually enrich silane. So when you make the semiconductor companies buy a gas called silane, which is silicon and 4 hydrogen atoms attached to it, and that's a very light gas. It's got a mass of 32. And traditional enrichers like Rosatom in Russia and Urenco in Europe, they have to enrich really heavy atoms. So they have to turn their silane into a much heavier molecule in order to be able to enrich it in their centrifuges. What's unique about our technology is that we can enrich light isotopes as well as heavy isotopes. So the Russians enrich silicon tetrafluoride, and then they've got to convert that silicon tetrafluoride into something that a semiconductor company can actually use, which is silane. And when you look at the purity, the chemical purity of the silane that these companies use, it's 6N's pure. It's 99.9999% pure in silane. And you can't remove enough fluorine atom to get it that pure. And so they're struggling to use other suppliers. We can actually just enrich silane as it is and supply it directly into gas. So it should be a lot cleaner and a lot easier to use.
Right. So there's a geopolitical story here and a technology story. Geopolitically, we saw that the U.S. Congress passed a law a few weeks ago saying that they don't want to import a highly enriched uranium. And it turns out Russia's state-owned agency is one of the leading producers of that. And it turns out that same technology that the Russians are using to enrich uranium is what they're using to enrich silicon. So that plays to, your advantage. And, you've got a technology that you've developed. Could you walk us through, high level, what that entails?
Yeah, so we actually have 2 technologies we're using to enrich isotopes. The first is the ASP process, and that's where the name ASP Isotopes came from. I lost imagination. I couldn't think of another name for the company. We started it up 3 years ago. So ASP is called the aerodynamic separation process. So when you think about a centrifuge that Russia will use, it's a big vertical tube. It's very heavy. It spins around in a circle on its vertical axis. And the heavier isotopes move to the outside of the tube, and the lighter ones move to the inside. That's just the centrifugal forces and forces of gravity. These centrifuges are huge, typically the size of a football field. They draw a huge amount of power. Often you see a power station next to them. And they cost billions of dollars to build and take years to build. Processes, we use a stationary wall centrifuge. So rather than spinning the tube, we actually keep the tube stationary and inject the gas at a certain angle, which allows it to spin round. And yes, there's a picture of a traditional centrifuge, and you can see that's a fairly, there'll be lots of those rooms together. And each stage enriches the process by a tiny amount. But we keep the tube stationary. Our separators are much smaller than those. And we spin the gas inside the tube. And that allows us to create a vortex inside the tube. And that allows us to separate heavy from light in a similar way, just using gravitational forces. We have some flow directors and specially engineered valve nozzles and what have you. And again, that allows us to separate heavy from light. So our plants are much smaller. They're much cheaper to build, tens of millions of dollars rather than billions of dollars. There's no moving components other than the compressor. So rather than having to find a zone that has no seismic activity and putting the plant on 10 feet of concrete, ours are much easier to put in just like a clean room inside a much smaller facility, much smaller building. And also enriched light as well as heavy isotopes.
Right. So a traditional centrifuge, you've got a large industrial facility, billions of dollars, a lot of moving parts. In these traditional centrifuges, you have a cascade or an array or sequence. We've got these spinning centrifuges to separate the heavier from the lighter isotopes. And then you use that sequence to then take the output from centrifuge 1, apply the same process in centrifuge 2, so on and so forth for 100 centrifuges later until you get highly enriched uranium. So your approach, you don't have those moving parts. You create a spinning vortex and using technology to separate the two. Now, I imagine it's hard to get a patent for that because you might be giving up some IP.
Yeah, so we wouldn't be allowed to have patents on our process. The IAEA have classified our, the International Atomic Energy Agency, have classified our process as being dual-use technology. So our plants are comprehensive safeguards. So what does that mean from a protection standpoint? We have trade secrets and a lot of know-how. If you were to come to one of our facilities, you'll find there's no computer lines or phone lines in or out of the control area. There's not allowed to take laptops in or phones in. Only certain people have access to the technology, about 9 people. There's metal bars and protection around the building so cars can't break in or drive through. Every car and every bag is searched on the way in and on the way out. And actually, I'm not allowed access to technology. Only South African citizens who have been cleared by the Non-Proliferation Council of South Africa are allowed to have access to technology. So I'm not allowed in the research center by myself. I can be accompanied by one of those 9 people. So there's exceptional scrutiny and controls over who's allowed to see the technology I've access.
Right. So using this technology now to enrich carbon-14, silicon, and uranium for multiple different applications. Semiconductors are in high demand right now. Uranium, it looks like you're developing that as well. And you've also had customers that front you the capital to invest in the plants to go build this. So how has that come about, and how are you finding your customers?
Yeah, so we haven't made a single outbound phone call since we started the company out. Customers all come to us. There aren't many companies that enrich isotopes. Rosatom is the world leader in enriching isotopes. Urenco is number 2, Urano number 3, and then there isn't really. The CNNC in China is the other one. There aren't really many companies that do that.
Where are those companies based, by the way? The ones you just mentioned.
There again, where based? Okay, so isotopes they're enriched using this kind of technology in Russia, China, United Kingdom, Netherlands, France, and a small plant in the USA. So just 6 countries enrich the world's supply of isotopes.
Got it. And then so one of the leading providers is a company called Centrus Energy, I believe, right?
They're just starting their plant up right now. I wouldn't say they're a leader. They've got some very good technology. And I think if they get access to more capital and build that plant, make that plant bigger, it'll be a fantastic plant in the US. But right now, it's about 900 kilograms of HALEU per year, ISA low enriched uranium, which requires LEU feedstock. So it's not going to be cheap. But it has capabilities of enriching small quantities of HALEU.
Right. So let's talk about HALEU now. So, our audience might or might not be aware, but there's been a lot of focus on the development of small modular reactors. The world needs more energy to power data centers. Renewables aren't coming online fast enough. They're just not reliable. Coal and oil won't cut it. So there's a lot of focus on nuclear. But specifically, if you can build small modular reactors and place them adjacent to the data center, the thesis is that you can solve the tremendous amount of energy that these data centers require, from 25 megawatts to, a gigawatt or so. But these small modular reactors, what happened there? You've got Sam Altman, who started building one years ago, Rolls-Royce and a few others. Where was uranium pricing then when they kicked off these business plans, and where is it now?
Yeah, so, these small modular reactors really are what the world needs, and they've needed them for decades. But things move slowly in this industry. When you think about a traditional reactor, it's gigawatts. They're huge. They take 10 to 20 years to build. They cost billions of dollars. These small modular reactors basically take, nuclear energy to production line economics that really drives down the cost of needs of building a nuclear reactor. So there were a number of companies involved in building these nuclear reactors and building these SMRs, and hopefully they'll come to the market maybe late this decade, early next decade, and it'll really solve a huge problem for the world. Problem is that they all require additional uranium, enriched uranium, and there really isn't much supply of enriched uranium right now. So as you alluded to, market prices for these, just uranium ore that gets dug out of the ground, the price of that is up, probably fourfold in the last couple of years. The price of conversions, of converting the ore into a fluoride that you can enrich, that's up about threefold in the last sort of 2 years or so. And then the price of enrichment, that's also up about threefold. And it's very rare to see a commodity increase by fivefold and not see a significant supply side response to it. Kind of shows you how challenging it is in this industry.
Right. And why haven't we seen that? You remember a few years ago during COVID, we had that spike in lumber prices and lumber prices went parabolic. Well, now we've had lumber deflation and lumber prices continue to slump. In general, when we've seen a price shock in a commodity, we've had a supply response as people come online to deliver supply. The invisible hand in the free market does what it does best. How come in the case of uranium, we have not seen the response in supply?
Yeah, so the lumber market, all you need to increase your production of lumber are more people cutting in more stores and more supply chain. To enter the lumber market, all you really need is money and the desire to lose it, and you can enter that industry pretty easily. The uranium market's much more challenging to enter. Getting a permit takes years. Being allowed to ship it takes ages. It's highly, highly regulated. So Urenco announced they're going to build a new HALEU facility in the United Kingdom. I'm told it's probably going to cost billions of dollars to build, and they're hoping to have it on stream like in the early 2030s. So you're talking 7 years away. And that's to build an enrichment facility. Mining is the same, conversion is the same. These take forever to build, and it's just the regulations are extremely stringent, and rightly so. I mean, it's a nuclear fuel.
Got it. So are we talking years before the supply of uranium comes back online? We've got Cameco in Canada, which is one of the leading providers of uranium. I've noticed going through their filings that they are underproducing what they had intended to produce. They're behind schedule. But, there is a lot of uranium ore in Canada and even parts of the United States. But are you just saying that the time required to harvest that is significant, or is there also like a know-how or a licensing gap issue?
Yeah, not just the ore. I mean, a metric ton of uranium ore is largely useless to anyone because you've got to convert it into a chemical and then you've got to enrich it into something you can actually use. And so, not just one component of the nuclear fuel supply chain that needs to change, and you need some more supply. It's both the mining, digging it out of the ground, the converting into a chemical, and then the enrichment. All three are needed before you can put it into a nuclear reactor, or typically needed before you put it into a nuclear reactor, and it just takes a long time to do that. Yeah.
Got it. So, when they established those business plans, the price of uranium was substantially lower. For those that are following it online, I've got a chart here showing that in 2016, the price of uranium was around 25 USD pound. I'm sure the units of this are quite a bit, high denomination there.
Oh, the pound.
There you go. And it's the prices have since gone up 350% or so in a few years. So they're all caught offsides on the price of uranium. Are the buyers of uranium price sensitive? If you run a nuclear reactor or an SMR and you're seeing this price shock, does that put their business plan at risk, or does it put in jeopardy the thesis of a nuclear renaissance?
Well, it means it just costs a little bit more. So I think when the SMRs were planned many years ago, the goal was to get energy at sort of 3.5, 4.5 cents per kilowatt hour. Maybe now it's 5.5, 6 cents per kilowatt hour. So it's a little bit, it means there's incremental price inflation in the SMRs. For a large nuclear reactor, which is already operational, the actual uranium or the cost of the uranium that goes into it is de minimis. It's sort of 3% of the total cost. And the problem there is that they actually need it to keep it running. And what I'm told is there are a number of large utility companies that have not secured their supplies for 25, 26, and 27, and it's going to become a problem. When you shut down a nuclear reactor, it costs millions of dollars to shut it down and keep it idle for a long period of time. And then, who's going to supply the community with power? It's going to be some problems in the next, I don't know, crystal ball, I don't know what's going to happen, but my guess is there's going to be some problems in the next 2 to 3 years, because not matter the price, it just isn't any available. If you go back to that chart a minute ago, that price spike, I think in 2008 or 11, that's a very aggressive price inflation for a commodity. Not many commodities can go from, let's say, $12 a pound to 150 in the space of just a couple of years. And that's because the buyers have very little sensitivity to the cost of the uranium. They just have to have it whatever the price. And so, you can see, there aren't many commodities where you can see those kind of swings. I can't think of many others out there that see that.
Right. So the buyers that run the large nuclear reactors are generally price insensitive because they need it. And it's not a significant part of their total cost structure. You said 3%. So they're a steady buyer. You need this thing to run. And then the SMR, similarly, it'll create some price inflation there, but they're a steady buyer. And I presume other costs around maintenance and cooling, staffing, security, transmission of energy, et cetera, play a larger role in the cost structure.
One of the biggest costs, that's the decommissioning and the building of it. So you got this, you got a $10 billion or $20 billion plant that's taken 10 years to build. And then when you decommission on the back end, you've got a huge amount of expense there as well. And so, the actual operating costs, the cash cost of keeping it going, are actually pretty low in grand schemes. Now, for an SMR, more of SMRs, uranium's a much more important input cost to that than it is, say, for a big, large, old traditional nuclear reactor.
Got it. So let's talk now about HALEU. We know what uranium ore is. That's what we dig out of the ground, and you got this conversion process. There's this enrichment process to make it usable. You said HALEU is high assay, low enriched uranium. So what is HALEU as it relates to SMR? Is that the input at the end of this process they use to generate energy?
Yeah, like putting gasoline in your car, the gasoline makes the car go. The HALEU is the fuel that powers the nuclear reactor. And so a traditional nuclear reactor, large, pressure water reactor, typically uses low enriched uranium. That's enriched up to 5%. When you dig uranium out of the ground, it contains 0.71% of the 235 isotope. Now, traditional reactors enrich that to 3.5 to 5%, and we call that low enriched uranium. What most of these SMRs need is more enrichment to 19.75%. So your energy density per kilo is much, much greater. And
Right.
And now to raise really little research. You can't produce HALEU in a plant that produces LEU. They're not licensed.
Right. So uranium ore less than 1% enrichment. Traditional enrichment processes, really your competitors, enrich to call it a 5% standard. And then your technology, which we described earlier, enriches to a 19% standard, which is required to make these SMRs viable by delivering a higher energy density.
Yeah. So actually, we have two technologies for uranium. We're actually hoping to use a different technology for uranium. So we use the spinning vertical tube, or the vortex, the ASP process, for elements or the molecules that are easy to convert into a gas. not everything converts into a gas. And so for that, we have a laser-based approach called quantum enrichment. And in that approach, we vaporize the metal, pass it through a laser, and that laser basically charges one of the isotopes, and we can select that and select and pick that isotope out of the mixture by using a charged plate. So we're building our first quantum enrichment plant right now in South Africa, and that'll enrich Ytterbium-176. There is no gaseous form of Ytterbium-176. You can't find a gas that contains Ytterbium. And so we will, we've said we'll have that plant complete in 2025. We're hoping to beat that by a little bit. But yeah, that's what we're hoping to use for HALEU. And the beauty about quantum enrichment, in our view, is that got an exceptional amount of enrichment per stage, really strong efficacy. And so that we believe that will allow us to take other people's depleted waste and convert that into HALEU in a single step. And that will really change cost dynamic for HALEU.
Right. So depleted waste, by this I mean you've got these barrels of spent uranium. It might be the output of material that was used by a nuclear reactor or nuclear weapons. And, I've read that there's a mountain in Nevada where some of this is stored. Is that, go ahead.
We're not that type of nuclear waste. There's two types of nuclear waste. There's nuclear waste that's come out of a nuclear reactor, and that typically contains lots of long-lived, very dirty isotopes that you have to basically bury under the ground some distance below the surface. The other type of nuclear waste is the stuff that comes out of other enrichment facilities. So when I'm enriching, when Rosatom or Urenco or whoever is enriching LEU, they buy their uranium at 0.71%. Maybe they put 6 metric tons of that into an enrichment facility. They get 1 metric ton of LEU, and they get 5 metric tons of waste. And that waste contains uranium at, say, 0.3%, and we call that depleted tails. So, in Ohio, there's close to 900,000 metric tons of depleted uranium sitting there in large 20-ton vessels. The same is true in Cappenhurst and Preston in the UK. Then is true in France. Then is true in Russia. And, no one really knows how to get rid of these depleted tails right now. They've been sitting there for decades. And, if we can take those tails and re-enrich them back up to 19.75% using our process, that will really change the operating cost and the cost of production of HALEU.
Got it. There's an ESG story here. There's getting more energy out of spent energy that you can get after. So you have two technologies, one that works today that you're looking to commercialize in the short term with these agreements with an industrial gas consumer and a semiconductor consumer. And then you got this new technology that you're looking to test, which will allow more efficient one step or shorter number of stages to enrich the uranium and other isotopes.
Correct, yeah. Ytterbium's a very interesting isotope in its own right. I mean, so Novartis have launched a new drug called Victor. It's a radiotherapeutic. And that needs a radioisotope called lutetium-177. And, it's very hard to produce lutetium-177, but Ytterbium-176 is the best starting point to produce that. Rosatom produce a few grams a year at the moment, and, it's close to $35,000 a gram. So we're hoping to get our plant up to enrich ytterbium and, start supplying ytterbium to the market. And if you look at the Novartis clinical trial, 5% of patients died because you couldn't get the drug, couldn't make the drug. Today, it's like a 2-month waiting list to get the drug. So huge shortages of these radioisotopes and stable isotopes we're hoping to solve.
Right. So ytterbium it's another element that is needed in this case for medical, and so that's one of the opportunities you're going to get after using the same kind of enrichment technology. And then you also have another isotope, and that isotope, I'm probably not pronouncing it correctly here, but there you go. And can you tell us the story and use case and application there?
Yeah. So right now, molybdenum-99 was used to produce technetium-99, and technetium-99 is basically the workhorse of nuclear medicine. It's like a $4+ billion market per year. And the problem, been a huge supply chain problems in this industry for decades. One of the reasons why I got interested in this industry was because of my investing days when, Cardinal House and Mellon Forward more often than not have huge misses in their radioisotope business because its supply chain is so challenging. Molybdenum 99 halves in value every 2.5 days, trying to ship it around the world, and you can't really keep it on a shelf because it's gone within sort of 2 weeks. Molybdenum 100, possible to convert that directly into technetium 99 at the point of care. And that means you can keep it on the shelf. You can take it when you need it, convert it to technetium 99. And it's, we feel, a much superior way to use technetium 99. So we're hoping, or we've certainly a lot of interest from customers who live in 99, who live in 100. And, we look to be supplying that soon as well to the market.
Got it. So you've got, multiple isotopes. I think carbon-14 is yet another one here. Could you give us a quick thumbnail on that opportunity?
Yeah, so carbon-14 is used in the development of new drugs and new agrochemicals. It's used as a tracer. So you have to see how the new product moves through the environment and moves through the physical human being. And you can track it. It's like emitting a beta particle. So you can track it like a flashing light through the ecosystem.
Like a tracer. The carbon
tracer. Exactly. The correlative tracer. Yeah. And so, the entire world's supply of carbon-14 used to come from Russia. And there's been real supply problems in that industry over the last sort of 2 years or so. I'm told there hasn't been any available since 2022. And, so we partnered up with a Canadian customer, RC14, and they service nuclear reactors in Canada. So they have access to a resin that comes out of a nuclear reactor that contains carbon-14 at 0.5%. So they will ship that to us. We will enrich it, and then we'll ship it back to them. And that contract is the minimum take will pay about $2.5 million a year. It could be more. We'll see. They've indicated they're going to need more in the first. But yeah, that's a very high gross margin product for us.
Can you define it? What is a take or pay product contract?
Yes, they're committed to give us $0.4 million per year, whether they take product or not. So that's the cost of having a contract in place.
Oh wow, very advantageous to you. That's the ideal contract that you'd like to have.
Yeah, listen, that's a perfect contract. We've got no customers to deal with one customer. They supply the feedstock. All we do is enrich it. That's what we know how to do, and that's what we like doing. But yeah, so it's a great product. It's a great contract.
So, you're at the center now then of semiconductors, healthcare, uranium, medical diagnostics, and you've got this unique technology to do that. You need a lot of energy to do this. I know you're building a plant in Iceland where the geothermal energy makes the cost, far lower. If you take a step back, right, you're, I call it a 200 million market cap company, a lot of volatility, of course, which kind of comes with the territory here. You indicated that you intend to be free cash flow positive the back half of this year. How big can this opportunity get in terms of the revenue generation potential?
Yeah, I mean, it could be huge. I don't know. I mean, we didn't set this company up to build one plant in South Africa and get by on that. We recognize the huge supply chain problems that have existed for years. And obviously we started this well before Russia invaded Ukraine. And obviously that, so the current geopolitical situation there has certainly brought a lot of focus on that company.
A lot of good timing, right? Good time, right time, right place.
I mean, listen, we didn't foresee that coming at all. We're saying that we recognize the supply chain. Supply chain problems really started in the world. I would say in 2016 when we started to see tariffs go in place, and that's just started a trickling effect. And then COVID-19 obviously accelerated those supply chain problems. And the last 20 years has been about globalization. The next 20 years is probably about deglobalization, is my guess, and countries becoming more self-sufficient and making sure they've got access to the essential materials they need all the time. And that's been a trend really for the last, almost 8 years, I'd say. But your question, how big could this be? Look, I don't know. I don't have the crystal ball, as I said earlier, but if we can drive down our cost of production, highly enriched silicon, down to, let's just say, $10 to $20 a gram, and each iPhone, I'm told, contains about 5 grams of silicon, and would someone pay an extra $50 to $100 for an iPhone that contains highly enriched silicon if the battery lasts a lot longer, much faster processing? The answer probably is yes. So it's our job to try and make it so that these new special materials can be used in many different applications. And to do that, we've got to make sure we're cost competitive, and we can make it such a price point that the consumer can take.
What do the margins look like? I imagine it varies by isotope, but in broad brushstrokes, kind of, the low end to the high side, or base case expectation. What do the margins look like across your isotope?
Yeah, so we want to make a pharmaceutical-like gross margin. My background has been investing in healthcare, so I like high gross margin products, and that's our goal. But I guess a lot of it depends upon how we account for it and what the supply contract looks like. If a customer is supplying the feedstock, paying fixed prices per enrichment unit and what have you, and we're taking very little risk, that should be a fairly low margin product. But if we're actually acquiring the feedstock ourselves, converting it into something the customer can use, highly engineered specialist product, that's very much higher gross margin. But on balance, we're looking to try and get pharmaceutical-like gross margins on any product where we have to take some form of risk.
Got it. So it's like a double-digit margin, somewhere in the 40 to 60% range. Is that fair?
In my world, pharmaceutical gross margin is north of 70.
Okay, north of 70. All right, great. And then it's really
glass built first. Let's get all producing, we'll see where we end up.
Right, because where you are in the business life cycle is, you acquire these IP assets, and it's a fascinating story to travel down. Those assets, the ASP technology, has worked, and you're deploying it now for, carbon 14 and other deliveries this year. But now you have this other technology, the quantum laser enrichment technology. And, if that also succeeds, then what does that unlock? Does that unlock a greater margin for you, or does it expand your universal opportunities in some other way?
I think it expands opportunity for many of our isotopes in other ways. Not customers recycle the isotopes they use, and so I've got exposure to them. So we have a choice of paying a very high price, or maybe lowering the price, so we drive delivering more volumes through the plant, and that'd be coming the cost of margin. So we focus on overall EBITDA. How much cash do we generate? The margin is just a one number divided by another. Let's focus on absolute quantity of cash flow and EBITDA.
Got it. So where are you in that kind of the technical feasibility and technical readiness, for the existing technology versus the quantum laser enrichment technology?
Yeah, our existing technology, ASP, we have 2 plants in South Africa. The first plant is complete. The second plant is pretty much complete. The first plant is actually enriching carbon 13 right now. Wait for our carbon 14 stock, and so that works. But the predecessor company built 3 ASP plants. So when it comes to TRL level, technology readiness level, I'd say it's a 9. Remember, South Africa built nuclear weapons back in the 1980s using this technology, or similar technology. So it's not, there's not much uncertainty there. Yeah, our scientists have used quantum enrichment in lab scale. Of course, we know it works in the lab. Getting something up from the lab to a larger quantity is always a challenge, and that's what we're going through right now. But we should see the results coming out, early 2025. Before.
Got it. And then, if the second technology works, then that's another unlock. And then the question is, how much volume can you generate? You'll have to invest in new plants. I know you're focused on the plants in Iceland that you're going to be building. You have to get licenses and permits for all this stuff. It's highly regulated category, which means there's also a big barrier to entry. But once you're on the other side of the fence, then that moat can protect you. But how much volume do you think you can generate with the existing technology, and then what that might mean from the quantum enrichment technology?
Yeah, we don't really think so much about volumes. So, when you produce polyethylene pellets, you're talking about cents per pound or dollars per kilo. When we look at something like carbon-14, that's priced at $24,000 a gram. When we
$24,000 a gram.
Yeah. When you look at something like uranium, that's priced at a couple of $100 a gram. So, we're supplying metric tons of it. The Ytterbium, the goal is to enrich that from 12% to 99 point. That's a huge amount of enrichment. Taking uranium from 19.75% is much easier than taking ytterbium to 99.7%. So, one isotope isn't like another. Volumes may not be the best way to measure the business. Traditionally, enrichment business are measured by the SWU, separative work unit, how much separation you have to put into a process.
I see. Got it. Look, if you want to power all the iPhones coming out 2 years from now so that they can have a longer battery life, you're going to need a lot of output of your silicon 28. That's got to be a significant engineering challenge. Isn't that going to take a lot of capital expenditures to build out these plants and produce at the level required?
Listen, I'm not sure the iPhone will be using silicon 28 in 2 years' time. And these things move a lot better.
Right.
Other than that, I wish they would. Our plants are pretty small. They're pretty scalable. So a large plant in Iceland is probably going to cost something like $30 million, that kind of number. In many cases, the customers are offering to put money forwards to build the plants. And we've got a lot of contact with debt providers. So our goal is not to have to use our balance sheet to build any more plants in the future. Our goal is to use other people's balance sheet. Get a much better return on assets, return on equity when putting the equity in.
Okay. What's their motivation to do that? What do they get for fronting the upfront capital investment to you? That's unusual.
It is. First of all, they get a supplier of a critical material to themselves. It's not Russia. And they own an economic in that plant and have a priority supply agreements. Will always supply them before any other customer in the world. They get a most favored nations price agreement. We'll never sell to someone else the same great product that we sell to them at a lower price. So when you think about the amount of capital someone needs to put in, if they're putting in $5 million, have that type of 10-year agreement, 20-year agreement, and certainty over supply of critical materials, be surprised how quickly companies have said that's a very attractive offer. So that's what the goal is to, and then also we lock in a baseload customer to a plant, and we know we've kind of got the operating costs of that plant covered by that baseload customer. So we're going to be that being a great way of building a business, great way of building a company.
Yeah, look, if you can not have to dilute shareholders and have your customers front the capital for investment, and you get a high return on invested capital, and you can plow that back, then you're in a good shape.
An example on that, we're talking to a medical device company that needs an isotope, and that's exactly the type of contract we're discussing with them. And I was on the phone probably 3 days later, semiconductor company, describing the type of contract we're talking to this medical device company about a plant in Iceland. 2 days later, that person called me up and said, Paul, we want an identical contract. This isotope here, want it signed by the end of the year, want it producing in 2026. People are, when you think about having certainty of a supply chain of a critical material for as little as $5 million for the next 5 years, that's very cheap.
Can you recognize their capital investment as a form of revenue, or it goes directly off of their PM?
I'd have to check with our accountants. I'd be surprised if we can recognize the down payment as revenue. I would have thought, but I'd have to check. I'd be surprised.
A management fee, an operating fee,
Yeah, like I think it's more cash in the bank and cash flow rather than semantics or a P&L, whether it's revenue or CapEx or investment or whatever, Cash flow and cash in the bank is what drives it.
Fair enough. It always comes back to cash at the end of the day. And then plants be operational. I know there's a lot of challenges with licensing, permitting, all the rest, and securing the energy you need.
I missed the first part of your last question.
When would they be operational, the new plants that you built your capital?
Yeah, technical communication. I think you asked when is the Iceland plant going to be operational? So yes,
Yeah.
we've got the majority of the permits already. We're waiting for, I think, one more permit, which we expect to get in the next, couple of months or so. We haven't yet signed a contract with a customer, but I expect to sign one of those in the next sort of couple of months as well. We've secured an energy deal. We've secured some real estate, at least on some real estate. And I think, once we've got permits, customer, we start building the plant. It'll take, less than 12 months to build. That's the goal. And most of the spend is in months sort of 4 through 8. So, we need to raise the debt for the plant, during the second half of this year.
Got it. Great. Well, look, it's a compelling story. So, you've got clients who have an urgent need for HALEU, you develop the business. Tell us a bit about yourself and, your background. You were in the biotech industry before.
Yeah, so I started actually a chemical engineer. I started chemical engineering at Cambridge like 30 years ago. I spent a couple of years doing research and development at Procter & Gamble in healthcare and healthcare applications. And then I actually spent 11 years at Morgan Stanley, based initially in London, then in New York as a sell-side analyst in healthcare. I got bored of being on the sell side, so I moved to the buy side. I then spent sort of 5 years or so at Solos, where I managed the investments in healthcare and chemicals company. And I spent about 3 years at Highbridge Capital, where I managed a portfolio of chemicals and healthcare companies. So I spent my entire career investing in healthcare and chemical. And that's when we found this opportunity. I could see straight away what it would become if we did it correctly. I understand the industry and the science very well.
A lot came together. I mean, you grew up as a chemical engineer in education, and here you are dealing with isotopes. Well, how did you come across the opportunity? You've got a co-founder that identified it, or what was the backstory?
Robert Ainscough is a co-founder. He's chief operating officer. He was the chief financial officer and chief operating officer, but now it's just chief operating officer. We hired another CFO, a new CFO last week. So he used to be involved in debt restructuring and debt syndication, that kind of stuff as a debt banker. I ended up on his desk in 2000, a group of South African scientists who had run out of money. And the question was, can you restructure our debt? And he took one look at it and said, I can't restructure this debt. And if I can't do it, no one else can either. He happened to show it to me. And I said, probably this is like a gold mine. I mean, it could be really valuable if we do this correctly. They're on their knees needing help, and we should be here to help them and restructure it and find a way to listen to a great company. So we suggest they went through business rescue, basically the South African equivalent of bankruptcy in the US. And when we entered business rescue, it goes through an auction process. It's a 30-day auction process, and we recognized as well that in order to bid for the assets, you'd need to have a license from the International Energy Agency and also one from the Non-Proliferation Council of South Africa. But we got those licenses before the bankruptcy process started. So, lo and behold, at the auction, there was only really one bidder for the asset. So I quickly raised some money from friends and family, mainly myself, and we raised about $4 million before the auction, and then we bought the assets out of business rescue. And then since then we've raised a lot more capital, and we've started building these manufacturing plants. And we're talking about why South Africa, because people often think how did you get good science in South Africa? We had quite a few US SMR company representatives come out to South Africa last December. I think most of them were kind of expecting to find tribes hunting with spears, but actually you had some of the most incredible nuclear physicists in the world, and chemical engineers in the world. And during the apartheid year, South Africa, had trade embargoes and restrictions on what they couldn't do, and so they decided to build their own uranium enrichment facilities. In 1970, they announced to the world they can enrich uranium. They then went on to build, well, I'm told it's 6.5 nuclear weapons. It's alleged or rumored they even conducted a nuclear test. Not many countries in the world have done that. So you had this amazing group of physicists and scientists operating in a regime that was not signatories to the Non-Proliferation Treaty or members of the IAEA. So the scientists had a very clear freedom to operate that didn't exist in many other countries. Obviously, apartheid finished in the early 90s. The first thing de Klerk did was sign the Non-Proliferation Treaty and shut down the weapons program and allowed the IAEA to have access to the country to inspect the nuclear facilities that existed. And our scientists were left without work, basically. So they transitioned into doing lots of research and development into other ways of enriching isotopes for friendly and peaceful purposes, like silicon-28, like Radium-100, like Chlorine-37. And then we found them a number of years later. So it's unique. But you have in South Africa an incredible spectroscopy group in Stellenbosch University. You've got an amazing structured light group, Vic University, who do a lot of our beam shaping for our laser plants. When it comes to hiring engineers and hiring nuclear physicists, nuclear engineers, South Africa's got 3 universities offering nuclear engineering as a course. In fact, the DOE last year sent 30 American students to Northwest University to learn nuclear engineering, because those skills do not exist in the US anymore. Most nuclear engineers retired 30 years ago. So we've got now 70 to 80 employees in the company. When we acquired the company, there were basically 10 employees, average age 65. Our average age now is about 30. 20% of our employees have got PhDs. Half have got advanced degrees. And we've never had an employee resign. We've let a few go, but never had any resign. I mean, we have a very good relationship with our employees, and unlike a lot of American high school kids that leave high school who want to work 3 days a week doing social media, our school leavers work 6 days a week very hard because they've seen what poverty is like and they don't want to be poor. So so we have a great team of engineers in South Africa. So we're very lucky to build that expertise up, which we couldn't do elsewhere in the world.
Incredible. Right. South Africa retained their nuclear knowledge and education and training. And the US, even though we've got 80 plus nuclear plants, has lost that and needs to recover that. So you raised $4 million. You saw this asset, you could recognize the opportunity. You bid on it in bankruptcy. Okay. Now you win this IP. You've got 10 employees. You got to pay the bills for, you got to keep them. They got the know-how. And then what did you do from there?
We recognized that the company had a lot of nuclear physicists and not enough engineers. So we really expanded the engineering and scientific capabilities of the team. So we now have a huge engineering department with mechanical engineers, chemical engineers, electrical engineers who design and manage and figure out problems when problems happen. And problems always happen when you're starting plants up, and they can troubleshoot and deal with that straight away. So we hired more people, and we started talking to customers to try and get contracts to start building more plants. And here we are 2.5 years later. The first 2 plants are starting up as we speak, and we're ready to go.
So after, you need more money to do all these things, right? You got to invest in plants and all the rest. So, I liken ASP Isotopes to like a venture capital story, and most venture capital stories are privately financed. They raise growth capital and they wait 10, 12, 14 years before they enter the public markets. You took a very different approach as a microcap, and you did this 2.5 years ago. So, you were building this business around COVID. That couldn't have been a lot of fun. So help us unpack some of the choices you made there. I mean, you've got a great network and a pedigree. You could have considered other financing approaches, but you thought, the public markets made a lot of sense. What was the logic there?
Yeah, I spent my entire career in public markets. I wouldn't know how to raise money in private markets. I've never really invested in private equity or, I've seen private equity investments myself, but I've never really, been in that area, that sphere. And so to me, the logical way to do it, in biotech, it's very similar. Public company biotech, from public biotech companies, you start the company up, you list it, you raise money along the way, so you get development milestones and what have you, and ultimately you hope to end up with a company worth billions of dollars in 5-10 years time. And I kind of took a biotech approach to this. Let's get some proof of concept, and then let's just list it and just raise what we need in the public markets as and when we need it.
So you retained an investment bank then, and some other providers of capital to help raise funds, and now you have a Nasdaq listed security, and you're out there. And then what was that like going through this during COVID? Did it have any impact on your business or ability to funds or?
Not really. We actually started this just after COVID, so we were still in lockdown mode when we actually made bid for the. I wasn't actually allowed to fly to South Africa from the US for the auction, so Robbie had to fly down from London, and South Africa was actually on the red list. You had to have a 2-week quarantine in a yellow country before you got back into the UK. So you had to fly to South Africa from London, picked the plant, went through the auction process. He flew back to the Czech Republic for his 14 days of quarantine, and then flew back into London after that. I wasn't allowed to fly to South Africa until February of 2022. So it was a challenge at first, leading this business and building it. When you're sort of 13,000 kilometers away, 8,000 miles away, it's pretty challenging to do. But we just got on good at it.
So, and how did you find the leadership to help you execute and operate? Because you're on a plane between the United States, UK, South Africa, and management and leadership's required to keep people focused and on task.
Yeah. So I spent most of my life living in New York. During COVID, I moved to Florida and got a house in Florida. But I have an apartment in Pretoria, South Africa. So last year I actually spent about 40 days in the US. I spent the rest of it either in Pretoria, UK, or other countries where I needed to be for particular things. This year I'll probably be a bit more in the US, but I've been very hands-on down in South Africa, and you have to be at this time of this company's evolution. It's essential.
Got it. And then how's it been as an operator? In most of your career, you were at an investment bank or an investment role, using your analytical acumen and training to spot opportunities. And now you're the CEO of essentially a fast-growing startup that looks like it's hit product market fit. You've got some paying customers that you got to fulfill. You're developing technology. You're proverbially jumping out of the plane and building the parachute at the same time. What's that transition been like for you?
So, I don't like managing people. I only have 2 direct reports, and so I've got very good leaders who lead the company. So I've met, I recognize that I'm not, I'm good at hiring, good at firing, but everything in between, I'm not much interested in doing. So I've got 2 very good leaders, and they've got a leadership team in South Africa. And so we have a good, so my job is more to determine the strategy and oversighting what's going on in terms of building, the operations, the R&D, customers, that kind of, governments and legislation, that kind of stuff.
Right. And engaging with investors and public markets as well. You've been very visible. You've got different YouTube videos. I'd encourage folks to take a look, and you can look up ASP Isotopes on YouTube to learn more.
The criticism I get from all of it is I don't do enough investor outreach, investor relations stuff. I mean, I've probably only done 3 days of investor meetings in the United States since we started the company up, ad hoc calls and that kind of stuff. But we have a group who does our IR for us, and so I do a monthly. I think every 6 weeks I do a webcast, and I think one of my board have told me this year I need to start speaking to more US investors and actually start engaging more investors. So that's the focus for this year, or second half of this year.
Got it. Great. When we looked at your business, we comped it to Centrus, ticker LEU, and that market cap is $1 billion. They're not free cash flow positive. I have to go check again. But you're guiding to free cash flow positive year end on a 200 million market cap, with customers paying for contracts, and you have a much far ranging menu of isotopes that you can deliver into the market, as opposed to being a monoline. So it looks quite compelling, looks quite interesting. Do you feel like you're still on path for generating free cash flow in the back half of this year and fulfilling your customer agreements?
Yeah. So yeah, we've got three verticals in our company: ASP Isotopes, Pet Labs, and Quantum Leap Energy. And so ASP Isotopes produces stable isotopes we've been talking about mainly on this call. Pet Labs produces radioisotopes, which has short distribution within South Africa. We tend to grow that around the world over the next several years or decades. And Quantum Leap Energy is obviously focused on the nuclear fuels of the future. So the Pet Labs is already generating free cash flow. That's good free cash flow positive already. And so that's there already. So it's start generating free cash flow in the second half of the year. Absolutely. Quantum Leap Energy is still some way away from generating free cash flow. And our goal is to spin that out in the near future. So it's a separately listed, separately traded entity with a separate management team. And so that'll lead ASPI and Pet Labs being a cash positive business producing stable and radioisotopes for semiconductors, healthcare, other unique industries.
And when the third business, the QLE business, which has the new quantum enrichment, one stage or fewer stage technology, will existing shareholders of ASPI benefit from that spin out?
So the goal is to distribute the shares to our current shareholders so that they have a share of ASPI and a certain number of shares of QLE. We've already reserved the ticker code, I think, on Nasdaq already for QLE. And so yeah, we've always said that QLE should be a separate business to medical isotopes. The nuclear fuels business is a very different industry to the medical isotopes business. Different customers, different kinds of capital needs, different regulations and licensing rules, that kind of stuff. So that's the goal. In the next several months is to do that.
Right. So it looks like your primary milestones are, generate free cash flow overall enterprise. I know 2 of your 3 businesses are on pace for that, as you noted. That's 1. 2 is spin out QLE. Are there any other key milestones that you're focused on?
I think breaking ground on our first plant in Iceland is a big milestone as well. And again, signing more contracts, more customers, all helps.
That's right. Makes money. Anything that keeps you up at night? Licensing, dealing with the government, the pace and velocity, or lack of pace and velocity. And I know you have to be nice around what you can say around licensing and but
so trying to start up 3 plants at the same time is always a challenge. So if you'd asked me the same question 12 months ago, I'd have said our balance sheet keeps working on it. We had a pretty thin balance sheet. They weren't that well capitalized. Now we're much better capitalized. We've never had as much cash on our balance sheet as we have today, actually. So that doesn't really keep me awake at night anymore. But there's always problems when you're starting up new plants. This component doesn't work, that component doesn't work. We fix them, move on to the next problem. They're the type of concerns that I have more now. I guess also the other concern is kind of more geopolitical. There's a lot of free money swirling around Washington right now and Europe. And, we feel our process is much more higher return on capital, much higher return assets and other processes. But obviously, if there's a lot of free money being given out, that removes our competitive advantage versus other competitors. And so, I'm always concerned about the competitive landscape and competitors getting access to large amounts of money, which allows them to compete with us on I would say an unfair basis, but whatever the basis is, and obviously we've got an election many elections coming up this year, actually, one in the UK, one in the US, happening in South Africa. Again, changes in politics are always kind of a concern. I guess, certainly, when people ask me to prefer Democrat or Republican president, bipartisan support for nuclear, bipartisan support for what we're doing. I guess, we benefit from incompetent, we prefer an incompetent government rather than a competent government, because that then helps our competitive advantage. But yeah, they're kind of the things that keep
right.
Right.
No, it does look quite bipartisan, for sure. You had a ban on Russian imports, which was led by the Republican side. You got Christine Todd Whitman, New Jersey Democrat, who's also advancing the case for nuclear renaissance and improving and updating regulation to make it more permissible. And you alluded to threat of competition and excess capital, and China comes into play there. You think about the subsidies around EVs, and obviously they're spinning up a big nuclear industry as well. But you've also benefited from the geopolitics. The United States doesn't want to import, neither does its allies want to import from Russia, a critical fuel source. And so, whoever can execute against the opportunity swiftly, and that's just the uranium side of the story too. Then you got the other isotopes that have a significant commercial opportunity. It seems like a compelling story. So
even without the Russia though, the crunch we're seeing now is always going to happen. So there'd been no investment in nuclear for the last 20 years or so. You've been oversupplied for the last 20 years. No one's made any money for the last 20 years. So zero investment. Only a slight tick up in demand, and then you're always going to see this crunch happen. I think Russia just accelerated the point at which it happened. I mean, if the world wants to double or triple the amount of nuclear power over the next 25 years, you're going to need to at least double or triple the enrichment, the chemical conversion, the mining. And, so we're always going to see this crunch happen. It's just, obviously, Russia has accelerated.
Are there any other opportunities in the ecosystem that you look at from your vantage point? A lot of people know about Cameco, UEC in the United States on the miner side. There are other miners out there as well, but on conversion or enrichment, are there any other players that you think might be worth exploring a bit further, or aspects of the value chain where you think they are more compelling?
Yeah, none of them are really listed. So, most enrichment is done by, in terms of enrichers, only 3 companies are listed that either enrich or have the capability to enrich or claim to have the capability to enrich. One is Fentress, the other is Silex Systems, and the other is ourselves. They're the listed companies that I believe, claim to have enrichment capabilities. And for the miners, there's lots of miners out there. Some of which look interesting, and there's no real conversion companies out there which are traded either. So from your standpoint, looking for investment opportunities, there aren't that many. It's not a very diverse industry.
Right. How can folks learn more, follow you, or dig into ASP Isotopes to learn more?
Then we've got a website, ASPIsotopes.com. On there, you'll find a lot of information on our investor pages and all our general industry pages. There's a contact us button at the bottom. So if you have any questions, you can hit that button and type questions in, and some of the team will look at it and try and answer them. And then, I'm going to start trying to go to more investor conferences this year. I'm going to a nuclear conference in New York next week. And I do a month, I think a quarterly webcast with Readiness or Emerging Growth. So again, that's typically on YouTube. And you can attend those and ask questions.
Perfect. Well, thank you for the time. We'll leave it there and have a good one. We'll be sure to stay in touch.
Yeah, thanks for your interest.
Thank you for listening in on the episode. Remember, in the world of investing, the road less traveled often leads to the greatest rewards. I'm Ram Ahluwalia, your host and Chief Investment Officer at Lumida Wealth, where we specialize in the craft of alternative investments. Invest wisely, stay ahead of the curve, and stay non-consensus.